in this business for the last 16 years, spreading excellence to all our 185 clients that we touch. We have been in operating in 16 cities in India, in about 5 different countries outside of India. We are 27,001 certified organization. We process 1.1 lakh employee records every month, and the big specialty is we have 1.2 million transactions every quarter, and we ensure that 99.5% accuracy rates are there, using our processes, using our checklists, using our expertise. This is what we promise. We've issued 500,000 Form 16s until date, and our client retention rate is an awesome 99%. So, friends, this is relativity for you. What do we do? Quickly, we do payroll processing, we do payroll compliance, we do TDS compliance at scale, we do labor law compliance, we have HRMS tool, we have a compliance tool as well that are used by enterprise organizations that have 10,000 employees, 15,000 employees, 50 branches, 100 branches, 25 branches. Sort of. And we also do HR consultation, India entry, what to do if this is the problem in the organization, so on and so forth. And we also do compliance audits, payroll audits, and HR audits for the organizations. So predominantly 185 of our clients, about 50% of them are enterprise customers, and the remaining 50% are small and medium-sized customers, which means they have employee size less than 1,000. Our enterprise clients include Cisco, Infineon, Hyundai, Royal Enfield, Hindu, Oracle, ARM, MaxLinear, LGs. These are all the big brands of the world. They are the who's who in their respective industries. And this clientele is a very prestigious clientele whom we enjoy serving from the last 16 years onwards. We also, appreciate a lot of our mid-sized clients. India is becoming, or is already, a country of small and medium enterprises. We power the nation through MSMEs. We power the nation through medium-sized companies. We welcome all of these clients that you can see on your screen. They make a hell of a lot of difference in the world. And we are happy that we are able to make a hell of a lot of difference to either their payroll or their compliance or their labor acts. So quickly, before we begin, I would like to understand the audience a bit so that I can tailor the next set of slides. I can give specific examples. So Divya, can I request you to launch our poll? This is a data of what's the size of your company, where do you belong, what's the industry that you're in, so that I can use specific use cases, I can use specific examples, which depending on my audience size. So just a quick thing, about 30 seconds, if you all can help me understand the participants poll. It's already active. So the first example is employee size of your organization, choose any one. What is the current, are you a HR professional or a finance professional or a compliance professional? Choose any one. What industry are you working in? Choose any one. And what's a biggest challenge that you're facing in your role? If there is an open-ended answer, you can definitely leave it there for us to deal with it. So this poll will help me give specific examples which will resonate with your industry, which will resonate with your employee size, which will resonate with your function as well, HR or finance or payroll. So it'll be very helpful. Some of them are okay. Please use the poll, not the chat. Kindly use the poll, not the chat, please. Yes. Okay. So last about, yeah, I see about 45% of the participants have polled. If all of you can contribute to this, it'll just take a couple of seconds. It will make the content very, very, very specific to each and every one. So I would request it's your fingers have to move. Yeah. The question is not something that you don't know. So these are questions that you already know. Please help us get it going. Yeah, we are closing the poll in about 15 seconds. So all of those, it's already there on your screen, Shraddha. Nidhi, it's already there on your screen. You can see the poll on your screen, please. Okay, so what I can see is we predominantly have about less than 500 sized companies are in predominance. 10 plus 35 plus about 60% of our audience are less than 500, which means 101 to 500 is the predominance. That's fantastic. And we also see that a predominance of our attendees belong to the HR function. That's great. That's great as well. And I can also see that there is a combination of IT, ITES, and others. So maybe those who are telling others, if you could just help me on the chat, what do you mean by others? Is it KPO? Is it BPO? Because you've not chosen manufacturing, you have not chosen IT, ITES. Instead, you've chosen others. So is it KPO? Is it BPO? Is it semiconductors? Is it retail? Is it textiles? What is it? Just curious to know so that I can specifically tailor examples to it. Nidhi, it's absolutely fine if you're not able to see the poll. Absolutely fine. It's okay. I can see logistics. I can see trading, edtech. Okay, great. I can see some housing finance. I can see some operations. I can see some recruitment services. Beautiful. So I think we've got a bit of good bit of numbers. About 65% of people have participated in the poll. So I'm stopping the poll so that we can move forward. So this is what we can see. There are about less than 500 is our predominance employer size, and most of you belong to the HR function, and predominance of you are in either IT, ITS, or others. And then there are a few challenges that you're facing in your current role, which we will look as we move forward. Fantastic. Thank you so much, each and every one of you, for sharing that. I will make sure that I use relevant examples which will help you with the specifics. Uh, Moving on to PF updates, the first and foremost PF update that we are all going to talk about today is the recent changes that are happening with respect to transfer of PF accounts. Right. So when we are talking about the transfer of PF accounts, you know that there was a notification that was published on the 15th January. And in this notification, we got to know that the transfer of PF has been further simplified. You all are aware that the transfer of PF has already got simplified about 2.5, 3 years ago, right? They introduced the online transfer claim portal, and with UANs, as you can see on the screen, when certain conditions are met, there is no need to manually initiate transfer claims. It would get auto initiated. So one such condition was where member IDs have the same UAN, and the UANs are allotted after the 1st of October 2017, and UANs are linked with Aadhaar. So these are three and conditions. They are not or conditions. It's not or. All of these three conditions should be met. So once we have met all of these three conditions, the current procedure was that the transfer will get auto initiated. There is no need for an employee or a member to actually initiate the transfer. Now, this has been expanded to another condition where UN was allotted after the 1st of October. Both UNs are linked to the same Aadhaar. Additionally, the first condition is also being met, where member IDs have different UANs, right? So even when this condition is met, currently the employee had to initiate the transfer by themselves in the EPFO member portal. So there was an additional step that the employee would take, needs to take. But from now on, what would happen is that additional step is also not required. The transfer will get auto initiated. This is the condition. Even when member IDs have different UANs, and UANs are allotted after the 1st of October, and both UANs are linked to the same Aadhaar, the revised, as per the revised notification, the transfer process will get auto initiated. So this is one best thing to happen. The next best thing to happen is, as you can see on your slide, member IDs having the same UN, but UN was allotted before the 1st of October 2017, right? So it was allotted before the 1st of October 2017. And let's say UN is also linked with Aadhaar. The final thing is, across both the member IDs, the name, date of birth, and gender are matching. Currently, it would get auto initiated. Okay. So same UN, it would get auto initiated. Now, additionally, what is going to happen is, even when member IDs have different UANs, it will get auto initiated. Earlier, it had to be initiated specifically by the employee, but now it will get auto initiated automatically once the employer tags the UAN. So this has a lot more importance for the employers to get the correct latest live UN from your new joinees. Whoever are joining your organization newly, of course, you will have all of their existing employees UN you would already have. This is more specific to the people who are joining newly to your company. Get the most recent live UN, and once this UN is attached to your employer ID, everything will get auto initiated. This will, in fact, help the employee in many ways, right? So there is no interference of either the past employer or the present employer. There is no interference of any of these employers at all. Another very important thing that happens is there is no need to wait. Otherwise, people tend to forget. We also know that after 3 years, the PF stops earning interest because the PF account becomes dormant. People just forget. They don't keep a track of this, or maybe nomination issues may come up. There is another different nomination in the previous thing. Now there is going to be a different nomination. So with this auto transfer, what happens is the necessary steps are reduced. So there is no need for the employees to wait. And very importantly, it becomes also employee friendly. Now, when we say that it becomes employee friendly, let's not mistake the smart, known, white collar workforce, right? They are already smart. They know that they have to do all of this. But as we welcome a lot more blue collar workforce into the EPFO fold, as we welcome a lot more uneducated people onto the EPFO fold, this will simplify things for those kind of people also. Yeah. It is all about making EPFO services accessible to the common man, not to the smart man. And there, I think EPFO has been doing a great job by automating these kind of things. And there is a lot of reduction in terms of dependency. There is a lot of reduction in terms of paperwork, so on and so forth. So when by this slide, with this, not with this slide, with this update, what is the update? The revised process is all of these four conditions. Any of these four conditions are met, the transfer will be auto initiated. With this, 99% of transfers will now be automatic and online. So there is only 1% of transfers which will have to be dealt offline, or which will have to be dealt in paper form. That use case is only limited to 1%. That is all. So this is a great step that the EPFO has been taking, and we welcome all of these initiatives as representatives of the HR industry, as representatives of our workforce, our employees, our workforce. I think EPFO should be congratulated for this particular step. Moving forward, the second extraordinarily important update is with respect to the higher pension applications. So before I, go a lot more detail in higher pension applications, if all of you could, chat, could put a chat on the chat box. Are Do you have submissions? Do you have employees who have opted for higher pension? Do you have It's a simple yes or no question. So if you have employees who have opted for higher pension, you have submitted it in your employer portal. Just say yes. So I know how in depth I will have to go. If there are too few people, then I don't have to go in depth. But if there are quite a few people who have higher pension applications, then I think you may have a lot of questions around that. So I know whether I'll have to spend a lot more time. So I can see a lot of no's, but currently manually submitting. Yes, no, yes, we have four. Okay, no. So okay, just link. So a predominant is no. There are a very few yes. So I will run through it. But all of those who have said yes, if you have specific questions with respect to higher pension, applications, hang on until the question answer session. Recently, I think just yesterday, did we have that yesterday? Yeah, yesterday we had an audience with one of the commissioners, and we've got a lot of insights about what to do. So that's something that we're also going to discuss during the question answer session. Please explain what is the meaning of higher pension. Yeah, so we'll definitely take that question as well in the question answer session. So all of those who have higher pension applications, please note that the absolute final date is 31st of January 2025 for us to take action. So these are the actions that you need to ensure that are taken. Ensure all applications in the higher. So all employers have your login to the EPFO system, and in the EPFO system, now you have a separate section, higher pension section. Please go into that higher pension section. Please see if there are applications that are there for your approval or for your rejection, right? And based on that, please either approve it or reject it. Sometimes it may not be that you have submitted, but an employee who was earlier working in your organization may have submitted, and that clarification or that question or that application may have come to you for approval or rejection. Please make sure that you check those as well. Please ensure that all clarifications, so there is a separate tab for clarifications in the higher pension section. Please ensure that all of these clarifications from the EPFO are addressed on time. There is a document upload section within the clarification tab. Please ensure that if they have asked you, let's say for form 3A or for form 6A or whatever document that the EPFO is asked for the approval of the higher pension application submitted by your working employee, please ensure that you upload that before the 31st of January. My humble request to all of you is not to wait until the 31st of January for this to happen. The next thing is, if the requested documents are not available with you, I mean with you meaning with the employer, you represent the employer in this call. So if the requested documents are not available, please make sure that you reach out to your higher pension section in your PF office, right? So if you are in Bomsandra, then you reach out to Bomsandra higher pension department. If you are in Bomanhalli, please reach out to the Kerapuram higher pension department. So if you are in Bangalore, Maine, please reach out there. If you are in Chennai, Tambaram, please reach out there. If you are in Bombay, Malad, please reach out there. So every office has a higher pension section. Please reach out to the higher pension section and tell them that you don't have this document. They will give you an alternate. We see this as a pattern with a lot of PF offices, that they are actually not very, if you don't have a document, let's say they are asking you for a wage register, and the records are very old, right? 2009, 2010, 2015. you don't, sorry, 2010, you don't have those records, there is an alternate that is being discussed. So please ensure that you reach out to them. And finally, please, share the screenshot of state completion status with the respective higher pension department. So these are very, very important aspects that you'll have to take. Hang on with your questions. If you have any, please make sure that we address them during the question answer session. The next very important update and scheme is with respect to the PM employment ELI, employment linked incentives. So how many of you have heard that there is an employment linked incentive that has been announced in 2024? How many of you have heard? Just heard. It's a yes or no question. Please use the chat to say whether you've heard or you've not heard. Okay, Dipali, you've not heard. Nivya, not heard. No problem. This is a great. Thank you, Bhagiraj. This is a great place where you can get to know a lot more detail about the employment section initiative. So I see a lot of people who have said no. Okay, then I think you should now be very glued to you should now be very glued to to this section because you've not heard, and this is a absolutely great way of how you can bring a lot of value to both a new joinee in your organization as well as to your company, because you are their HR or you're their finance or you're their compliance or payroll personnel, right? You go tell this, make this work, tell this to your boss, and get a good name. So that's something that's very essential. And how many of you have heard that there was a PM PMPPRY? What PPRY? PMPRY scheme. I think way back just after COVID. If you've heard that, there were a lot of conditions, right? This time we see that they've relaxed a lot of conditions. They've made it a lot more accessible. They've made it a lot more accessible. So that's a good thing about this particular scheme in 2024. So there are three sections in this PM Employment Linked Incentive Scheme 2024. Scheme A is for the first time enrollers or members into the EPFO system, right? Irrespective of what your industry is, you may be IT, you may be manufacturing, you may be BPO, you may be KPO, you may be logistics, you may be services, you may be operations, you may be supply chain, you may be R&D. It does not matter. If you are hiring somebody who has never been in the EPFO system and you're hiring them and you're enrolling them in the EPFO system, the employees can make use of that particular scheme called Scheme A. The other two schemes are specifically for employers. Scheme B is for manufacturing organizations only, and Scheme C is for all other non-manufacturing organizations. So it's like Scheme A is applicable to everyone because it is more as a benefit to the employee, not to the employer. Scheme B and Scheme C are benefits to the employers. Scheme B belongs to the manufacturing sector alone, and Scheme C belongs to all of those sectors which are not covered in Scheme B, which is the manufacturing sector. So that's as simple as it is. Once this program is over and this this document is shared, you can see this PDF. So this is a link to the notification. So please click and you can download the notifications too. Let's look at what are the conditions. The first and foremost conditions. In fact, the due date for this has already passed, but for some reason the EPFO has not disabled this option. So if you have not heard and you're hearing it right now, you still have time to make use of it for all of those employees who have joined after 1st of April 2024. Very, very essential. One, activation of UN. UN has to be activated. Second is KYC has to be completed. And when we say KYC has to be completed, it's not just any bank account. It has to be the Aadhaar linked bank account. We call it, or technically it is called as Aadhaar seeded bank account. That bank account information has to be given here for KYC completion, right? If this is not completed by the new joinees or by those for whom you want to avail this benefit, you cannot avail this benefit. So these are the two minimums that has been set by the EPFO. Now let's get into the scheme. ELI scheme A is a scheme where the employee benefits and all establishments are eligible. Anybody who has been a first time employer with EPFO and who is earning less than 1 lakh rupees a month is eligible for the benefit of the scheme. At least 12 months, this employee, the employer is required to retain the employee. So this works dual ways, right? Only if the employee sticks with us meaning with employers for a minimum period of 12 months, only then they will get this benefit. So that's a way, that's an incentive for them to stick with us for 12 months, right? Think about it. It's payable to the employees and the enrollment duration is 2 years and it has already started. 1st of April 2024 to the 31st of March 2025 is 1 year and 1st of April 2025 to 31st of March 2026 is another year. So anybody who has joined between 1st of April 2024 is already eligible for this benefit. What is the benefit? Right? The benefit is 15,000 rupees, a one-time payment of 15,000 rupees or 1 month wage, whichever is lower. So if the wage is 8,000, they will get 8,000 rupees. If the wage is 10,000, they will get 10,000 rupees. If the wage is 20,000, they will get 15,000 rupees. If the salary, wage, all of that is interchangeable. If the salary is 50,000, then they will get 15,000 rupees. So anything low, if the monthly salary is less than 15,000, they will get 1 month salary additionally. If the monthly salary is more than 15,000, they will get 15,000 rupees additionally one time. Yeah, and the benefit period is 3 years. Subsidy will be paid to the employee in 3 installments. And there is a small condition that the employee should undergo an online financial literacy course. It's a very simple course that they'll have to undergo. The details of the course is yet awaited, but once it comes up, we will definitely beam it to you. So trying to make this simpler. It's an illustration. Let's say the monthly salary is 20,000 and they have joined on the 1st of December 2024. That is, we are in January. I'm talking about the previous month. The UN is activated and KYC is completed. I said KYC completion means Aadhaar seeded bank account and PAN. Both of this has to happen. And no membership in EPFO earlier. They may be job holders earlier, but no membership in EPFO earlier. So if you onboard such an employee and if you retain them for a minimum of 1 year, one year, which means from the 1st of December 2024 until the November 31, no, November 30th of November 2024. You retain them until that, then they can avail 15,000 rupees. That's pretty good money, yeah? Not bad. They will get this in 3 installments. Now, what will be the first installment? What will be the second installment? What will be the third installment? We don't know. But details with respect to that is awaited. Most probably it will be divided by 3, right? And details we are expecting it before March because they will have to start giving this benefit from April because anybody who has joined on the 1st of April 2024 is eligible, right? So 31st of March 2025, 1 year is complete. So before that, definitely all of these updates will come up. So this is a quick illustration of the ELI scheme A. Gentlemen and ladies, the scheme A is only a benefit for the employees. Yeah, it is not for the employers. But how can we translate this into a benefit to employers is by saying that because they join your organization, they will get 15,000 rupees or 1 month salary additionally. So that's definitely a point that you can mention. And the second point that you can mention is they will get this only if they work with your organization for 1 year. If they don't work with your organization for 1 year, they would not get this. So these are the two benefits for the employees, as I can see. Wonderful. Moving on. So I saw that there are very few in manufacturing. So what I'll do is I'll first take scheme C, which is non-manufacturing. Then if we have time, we will come back to scheme B, which is manufacturing. Okay, beautiful. So this is a benefit for employers. This is a benefit for employers. Now, what is the eligibility? The eligibility is net increase in employment. What is net increase in employment? You have a headcount, and then you have resignees, and then you have new joinees. So resignees is a minus, new joinees is a plus, right? Is equal to what is the net increase. So that is the plus and the minus both put together is net increase. And the net increase is very simple. If we have less than 50 employees, the net increase expected is 2 employees. And if we have more than 50 employees, the net increase expected is 5 employees. Yeah. And the good thing is what kind of employees are eligible for this is all new joinees and rejoinees. So all new joinees in an establishment, not with EPFO, which means they could be first-time members with the EPFO, or they could be working somewhere else. They already have a UN and they are moving their employment from company A, which is an EPFO member, to company B, which is also an EPFO member. So in that sense, all of these eligible employees will be taken for this headcount of net increase headcount. And what is the condition, right? Again, this is also for 2 years, that is from the 1st of April 2024 onwards. The enrollment has already begun. It will run until the 31st of March 2026. What are the benefits? So here, the employer's contribution towards PF. Please note the employer's contribution to the PF. We all know there are two parts of contributions. Employee contributes 12%, employer contributes 12%, or limited to 1,800 rupees, whatever is the structure that you are following in your organization. So employees' contribution will continue as is. We will deduct from the employee and we will pay. Whereas employer's contribution, on that part of the employer's contribution, EPFO is going to contribute up to 3,000 rupees per month for 2 years. Imagine, the earlier benefit was a one-time benefit. 1 month wage will be given to the employee. This is a month-on-month benefit to each employer. To each employer, this is a month-on-month benefit. So let us say, for example, I'll take 2 examples. One example is okay, let me ask this question on the chat. How many of you limited to 1,800 rupees, and how many of you pay 12% of basic? Let me tailor that example as well. How many of you limited to 1,800 rupees, and how many of you have 12% of basic? Okay, I can see a lot of 1800s, 12%. Okay, 1800, a lot of 1800s. Good. So 1800 capping, great. Yes, I can see that. Krishna, both options are there. Okay. Ramachandran 1800, Shraddha 12%, Bhupesh 12%. So what I am able to see is there are a lot of 1800s and a few 1200s. It's fine. Whatever works for your company, whatever works for your organization. Now, let us take the example of 1800. So the employer is deducting 1800 rupees from the employee. The employer is adding 1800 rupees as a part of the employer's statutory contribution and paying 3,600. Now, let's not talk about the bifurcation to the EPF and EPS. Let's just keep it simple. Yeah. While doing this, if our organization, if our establishment is eligible for this scheme C based on the conditions above. The 1800 rupees that we are paying on behalf of our statutory contribution need not be paid. Need not be paid. Now, let's say there are now, because that will be subsidized by the EPFO for a period of two years. So let us say if in the same previous example, right, he had joined on the 1st of December 2024. So from 2024 onwards, the 1800 rupees that the organization has to pay to the employer need not be paid. Now, the nitty-gritties of this is awaited, which means for the past period, how do we get money back from the EPFO, or will it be adjusted with our future dues? We don't know, but most probably this is going to be the mechanism, right? In the ECR, once this update comes up in the ECR, they are going to reduce the number, capping it to 3,000 rupees, and only the balance we will have to pay. This is our assumption based on our past experience with EPFO schemes. Now, let us say there are a few employers who are paying 12%, right? So let us say your PF wage is 30,000. Yeah. So 12% of 30,000 is 3,600 rupees. So when it is 3,600 rupees, 3,000 rupees will be paid by the EPFO scheme. And you are expected as an employer, your statutory contribution will be only rupees 600. It will not be 3,600. Instead, it will be only rupees 600. This is how the mechanism is going to work. Now, another example is where we can say the PF wage is 75,000, because up to 1 lakh earners are eligible for this. So when the PF wage is 75,000 and you are having 12% of basic, your basic may be 40,000. So 12% of 40,000 is 4,800 rupees. So in that case, 3,000 will be paid by the ELI scheme, and the remaining 1,800 rupees is what you as an employer will be required to remit until the scheme gets over, or until the employee resigns. So until that time, we will be able to continue. This benefit is what the scheme benefit is. It is a great benefit. Imagine we getting 1,800 rupees for every employee for a period of 12 months. Let's say we have 10 new joins, so 18,000 into 12. It's quite a good value that we should definitely not let go of. So my request to all of you is, please make sure that the KYC and your what are the two conditions? One is the KYC and the other one is UAN seeding. Both of these are done, and your net increase in employment that continues. So based on that, that is what this particular scheme is all about, right? And this will not be for the previous joinees or for the existing employees. This will be for the new hires joins. Yes, mean that the other conditions is that this will not be available for those employers who are taking Part B, that is the Scheme C. And this will be an addition to Part A. So an employee will get Part A, and for the same employee, the employer can avail the Scheme C. That's the design of the scheme. So this is a basic summary or understanding. What I will do is I will skip this section and we will spend a little more time during the question answer sessions. That will be better. Again, trying to emphasize that the activation of UAN and KYC completion are essential. And when we say KYC completion, it is Aadhaar linked bank account. So please make sure that you have this during your pre-screening round, or during your during your onboarding round, or during your documentation round, that you collect evidence for Aadhaar linked bank account. Next is a basic update. EPFO is now going to become, going to announce, or it has already announced, launch of EPFO to everyone a lot more seamless. So in this new system, EPFO 3.0, a big benefit is to the members of the EPFO, members of the EPFO, where members can apply for an ATM card, and the money that is available in the EPFO is just like a loan, right? A loan or a partial withdrawal, whatever it is. It can be accessed via using your EPFO ATM card in any ATM machine. So we are heading towards that. We're still not there. I think the expected implementation is sometime in the month of May or June of 2025, this year, May or June. So this means that there will be better financial access to everyone. This also means that a lot of paperwork will get reduced. A lot of dependency on the employers will get reduced, and a lot of red tapeism also will get reduced. So these are all good things, that the workforce participation, because it is increasing, ever increasing. It is very essential that all of these new schemes make it for the betterment of our employees. The downside, of course, is that EPFO is supposed to be a PF, bounty. You are supposed to enjoy the benefits of your PF retirement account during your retirement, that is 55 or 60. But giving all of these access, I don't think many people will have that retirement bounty, right? So we will be required to take care of our own retirement. There will be a lot more load on us to take care of ourselves post retirement. So that's definitely going to happen. So this is another update. This also signifies an important aspect for employees. Now, what is very important for the employer is, until this ECR, right? The transparency has to be very high, because all of that data is what is going to contribute to the system. The bank account linking, the UAN, the nominations, the online transfers already happened, so there is nothing there. The activation of UAN, and very importantly, the monthly filing of ECRs, the PF wage that we are mentioning, the NCP non-contributory period, and the gross wages. So this has a lot of bearing on the data that we submit. So there is a lot of transparency that we will be expected to have, and there is a lot of importance on that piece of data that we will have to give. So that's a lot more thing that we need to keep an eye on. Anyway, this is all general, and this is not something new, but this is something which is very important. But in the interest of time, I'm skipping this online joint declaration. We will look at it later if time permits, or if there are any specific questions, we will talk about it during the question answer session. Ladies and gentlemen, we also do a lot of content release, a lot of knowledge updates on all of our social media. We have a LinkedIn page where there is a lot of there is actually a question answer, a quiz that we run every week. Divya, one of our marketing team members, she runs a poll, she runs a quiz, and this it's a technical quiz. Typically, it's either with respect to payroll or compliance. Please connect with us on LinkedIn. Divya, please give all our social handles on the chat. It's coming up right away. And our YouTube has a few videos about about uh, the knowledge that will be useful for HR professionals or payroll professionals. And we also do a lot of newsletters, so subscribe to our newsletters as well. Make sure that you follow us on LinkedIn as well as on YouTube. Both of these are our most active channels. And you can also connect with me. My LinkedIn handle is also up here. Yes. Um, the last section is our question answer session. Before we get into question answers, I would like to do a quick feedback. Divya, would you please launch the feedback? Fantastic. You can see questions. It's basically just two questions about what was your experience overall with the webinar. How did you like the information that was being shared? What would you like moving forward? That's it's basically a place where we know that we can do better the next time. So thank you so very much for participating in the feedback poll. Please, we have about 50% who have already participated. Thank you so very much. All of the rest, please make sure that you hang on for the question answers. This is where we are going to discuss a lot more specifics about nuances for your organization, about nuances for your use case. We will take your questions via chat and we will start talking about it. We will start giving you solutions. So hang on for the Q&A session. At the same time, please complete the feedback, because by the time we complete Q&A, many of you would have already left. So I also invite Arun. Arun is our lead for compliance. He takes care of India-wide compliance for all enterprise clients of Relativity. Arun is right next to me. Arun will also handle predominantly the Q&A session. So Arun, over to you. Other participants, we have about 70% who have already completed. My request to all of you is, we invest so much time and energy to make this happen. We would really love your feedback to make this better. Thank you so very much. While all of you do the feedback, over to you, Arun. Please start taking questions. Please start, answering questions on the feedback. Yes. Yes. Everybody can hear. You can mute. Arun is just next to me. Yes.
Hi everyone. So you'll have more questions related to the topics that we discussed today. So probably we can go one by one.
Yeah. So one of the, I'm looking at the chat, and I'm just trying to see if there is a recent question that has come up. Yes. So yeah, there is a question of Arnold. Can we apply for ELI scheme 1 and 3 at the same time?
Yes, I think we will respond that. So
we've already answered.
We can apply.
Yes. So any questions with respect to higher pension? Any questions with respect to ELI scheme, or generally any questions even with respect to Provident Fund? We are here to talk about it. I think quite a bit of questions have already been answered by Arun, right?
Yeah.
During the webinar. Yeah. Yes. How can we take the benefit of ELI?
So the process is said to be, provided by EPFO. So you're right to
correct. And I think a fair time for the EPFO to come out with it is March.
Yeah.
Because from April the benefits need to be rolled out of the ELI scheme. The ELI scheme is already operational from the 1st of April 2024. So by March we should get to know the actual nitty-gritties of taking the benefit of ELI scheme, whether will it be a reimbursement to the employer, or whether they are going to reduce it from our payables to the PF department. All of that is going to happen most probably by March. Okay. So there is a query by Pankaj. How long this pension continues, whether till last breath or any certain period?
So we responded it's still the last breath. So
yes. So it is until the member is alive.
Yes.
Am I right? Yes. So that is the pension. After that, what happens? Does the family get pension? No.
See,
is there a family
with regards
pension?
to higher pension, they have not given the clarity. But with regards to the normal pension, the family members next to that family members, they will be eligible for that.
The family pension, not the same pension that they are getting.
Correct.
Am I right?
Yeah.
Or is it the same pension?
No. So the family pension is
family pension. So after the member dies, and that's a good question, Pankaj. I'm sure there are a lot more people who may have had this question. After the member dies, the family is eligible for family pension. Now, family pension is not the same as the pension that the actual member will receive. Yeah, good. We have quite a few questions now. Okay, so let's take one question at a time. How to apply for ELI scheme C? I think we just answered that. What is the meaning of higher pension? Yeah, so is there okay? So there are a few more people who have asked for higher pension. So in 2022, right, there is all of you know that there is employees pension scheme EPS. A part of our money goes to EPF and a part of our money goes to EPS, employers pension scheme. And this the part of our money that goes to EPS, to our employers pension scheme, is the one that gets us pension. The one that goes towards the Provident Fund scheme gets us the lump sum, right, when we retire. So
it is restricted earlier.
In 2014, since 2014 onwards, they restricted the EPS contribution to 15,000 rupees maximum, right? That's the wage limit. Now, this was deemed unconstitutional by the Supreme Court in 2022. And then Supreme Court said, no, you cannot do this. You have to give the benefit of full pension. Let's say if somebody wants to contribute 8.33% of the full value of their salary, they should still be able to contribute it, not limited to 15,000, so that they get higher pension. And that's the name of higher pension, right? So it's a big story. I can't tell it in a few minutes, but yeah, this is the beginning, right? So Supreme Court ordered the EPFO to allow people to modify their pension applications if they are interested in getting the higher pension, and that is what we mean by the higher pension applications. I hope that is useful for Arnold and Harshita and all of those who have asked for details regarding higher pension. Ramachandran asks, how many days will it take for transfer of accounts? So typically,
earlier it was 45 days, 30 to 45 days. Now it is 20 to 30 days.
Within 20 to 30 days.
Maximum.
And I think date of exit is very important for that, right? So yeah, so date of exit is very important, and it will take about 20 to 30 days maximum. Okay, so is contribution 12% of basic or 12% of gross pay? So 12% of basic is the contribution, but if you are limiting it to 1,800 rupees, it is gross minus HRA. That's the calculation that we will have to do. It's not purely 12% of basic alone. If we are limiting it to 1,800 rupees, it is gross minus HRA. Okay, so Cruz asks another question. As an employer, we deduct 1,800 from both ends. Can we deduct 1,800 for some employees and 12% for others, or does it have to be standard across the organization?
Yeah, we can, but we have to provide a joint option that is Form 26 of 6 to EPFO that we are considering for some employees with the on the basic. So this joint option has to be submitted to EPFO, and based on that we can contribute on higher value. That is on the basic.
Beautiful. So it is possible. Short answer, Cruz, is that it is possible with 26 of 6 joint declarations, right? Yes. If someone has 2 UANs and the older one has not KYC updated, how can we link both? Neelendra Pandey has asked this question. Is there a possibility to link both?
Yeah, so if the employee has the member ID, so that member ID can be linked with the current UAN, the latest UAN, which is updated with Aadhaar. So then he further use the same UAN, the latest UAN for all the upcoming services. So that's how we can transfer the funds and use this.
Okay, so what you are saying is not to use the one where the KYC has not been updated. Not to use that. Instead, use the latest one. Right. I hope you got the answer, Neelendra. Let's talk about Pankaj. May I know the pension section of PF office in Delhi. Delhi has a lot of PF offices. You will have to find out, from the EPFO website itself, which is the PF
Establishment
office.
search. There is an option called establishment search where you can put the member ID, I mean your employer code, and you can get the address details. So there in the PF office, predominantly PRO will connect you to the pension section.
Right. What is the meaning of higher pension? We just addressed that. Could you let me know the details of PMPRY? That particular scheme is already over. Vivo, not Vivo. Whoever the gentleman or the lady is, that scheme is already over. Pradhan Mantri, some Yojana, right?
Yeah.
Okay. What else is there? What all our components consist in wages as per PF in ELI scheme and higher pension? Components. What is components? What are all components consist in wages as per PF in ELI scheme and higher pension? So when we talk about wages, you are asking, that 1 lakh. 1 lakh is what? 1 lakh most likely is the gross salary, right? That's what the 1 lakh is. So if the gross salary is equal to or less than 1 lakh, they can avail ELI scheme. That has nothing to do with higher pension. Okay. So let's not confuse ELI schemes with higher pension. For ELI scheme, the 1 lakh is gross wages. Okay. And an employee worked 2000 to 2007 with PF ceiling, 2007 to 17 without PF ceiling, actual to EPS. Now ceiling work. Is he eligible for higher pension? So Tangavel, this though I would like to answer this, the new applications are already closed. Nobody can make new applications towards higher pension now. The due date is only for approving or rejecting the existing submitted applications, which have already been submitted. The due dates for new submitting applications for higher pension, I think one year ago itself it was closed. After about 3-4 extensions, it was closed. Okay, we have approved all PO higher wages requests, and no clarification has been asked till date. Do I need to do anything?
Yeah. So I think with the latest
Yes.
update from the commissioner, so you have to take a screenshot of your status, the pending status or the closure status, and you have to send that status to the respective higher pension department. So that is the one action that you
A confirmation email with the status can be sent. Oh, I think Manigandan has already. Thanks, Manigandan, for helping us out with this question. I'm sure Kumar also appreciates your support. Thank you so much. We are contributing 12% for 650 employees. Please let us know about joint online or manual form. Is it online or manual? 26 or 6?
Sir, 26 of 6 now actually they are bringing in online also, but still they are.
But currently it is manual.
Or manually they are.
So the short answer to Kumar is currently it is manual, but shortly they are going to.
They have brought in that concept in ECR, so later they will bring it online also.
Right. Not sure this question sounds good. Is 58 an aged person also applicable for ELI scheme?
There is
a person age
restriction.
There is no age restriction.
Yes. But make sure he is a first time employment to the PF. Membership to PF is first time.
That is if they want if they want to take the scheme A.
Scheme A.
If they want, if you're just looking at scheme C, even that condition is not required, right? Great. Okay. So age is not a criteria. The criteria is the first time employment for scheme A. Great. Okay. There is a question, Akshita. Here in our company, every employee is getting their UAN inactive. What is the solution? We have reached out to PF office, but we did not get any solution. Any suggestion? Here in our company, every employee is getting their UAN as inactive. What may be
inactive in the sense they have to activate it. So any particular reason, maybe they can approach the EDP cell in the EPFO. They can give the guidance how they can make it active.
So, so there is a process of activating the UN, Akshita, where the UN has to be activated. If you are unable to activate the UN for some reason, what Arun suggests is that why don't you approach the EDP cell? It's called as the EDP, Electronic Data Processing Cell. There is an EDP section in all PF offices. So you can approach that section to check what is stopping from the UN to be activated. So that's something that you could do. Mentioning applications close to apply. Okay, thank you, Tangavel. In case of portal and real exit date are mismatched, how can we fix it?
The JD option. So I think Mani has.
Yeah. So there is a joint declaration option. Manikandan, thank you again for responding. Will the higher pension application be submitted online or manually? So the new applications we can't submit for higher pension. That time has already passed, but everything was online. Even now, all approvals, all rejections, all clarifications with respect to higher pension is all online. Unable to activate. Okay. Unable to activate. So Akshita, why don't you reach out to us with a specific screenshot? Let's see what the solution. I mean, what the challenge is. So if you can take a screenshot of the error that you're getting and reach out to the email ID that is there in chat, we'll see what we could do. Okay, so there are also people in YouTube, and there is a question from one of our YouTube attendees. I have a question on transfer claims being rejected on account of confirmation from employer about enrollment to EPS scheme. So
whether they are part of EPS member or they are not part of EPS member. So we need to check whether that employee already has a membership to pension scheme. If he is a member to pension scheme, then we have to continue the same in the current employment. If there is a mismatch in the previous and current pension scheme, then it has to be addressed through Form 3 process.
Okay, so Mutiam, I'm sorry if I'm pronouncing it incorrectly, but I'll go with your first name, Mutiam. Mutiam, this may be a problem where the previous employer and the current employer's pension scheme eligibility do not match, right? Either the previous employer, they have given you pension eligibility, but the current employer has not provided the pension eligibility, so there is a mismatch. It's like this: once you are a member of the EPS, Employees Pension Scheme 1995, you are a member of it permanently, and no withdrawal or transfer will be allowed if there is a mismatch in any of the employers. So that may be the most likely reason. Please have a look at this particular aspect. That if there is a mismatch, then you'll have to approach your employer to correct that and only then transfer or withdraw whatever it is. Until such time, you will not be able to transfer or withdraw. Okay, November month wages wrongly paid 2 times. But PF office side response for refund the payment, please, any suggestions? November month wages wrongly paid double time. So I think there is a refund.
So they have to reach out to the.
You'll have to reach out.
They have to reach out to the accounts department of the PF office.
Yeah, you are already late, Vaidyanathan. The suggestion is that you immediately reach out to the accounts department of your respective jurisdiction PF office. And we've worked with a few clients for whom we've been able to get a refund. The refund is not impossible, but it involves a bit of paperwork, but it is definitely possible. A few rounds, and if you understand what documentation has to be submitted, the refund is happening not at all an impossible task. So please reach out to the accounts section of your PF office. Okay. I think all the okay. There is one last question, Sushma. So we'll take two last questions. If there is anything, please please put the question in the chat right now. There was an article in the Economic Times. Window is open till 31st January 2025. If you can comment on this. So that is also something that we have told, that the higher pension approval or rejection. So this window is open until 31st of January 2025 only for the employers, not for the employees. So there is employee has to initiate, then the employer has to approve, then the EPFO has to do something, then there are clarifications that they ask. So this is for the back end, employer and EPFO. Only for these people, this window is open. For the employees, the window is already closed 1.5 years ago. Yeah, I hope that helps. Okay, this is the last question. For EPF settlement to the devised employees family, whether go by LHC or nomination, legal hire certificate or nomination.
It depends of the PF office. Most likely they go, if it is an online claim, they go by the nominations that is filed by the member. If it is they have not filed a nomination, e-nomination, then they go by the legal hire certificate,
Yeah,
which the family members produce.
Right. So I also concur with Arun. There is a nomination facility. If the employee has availed the nomination facility, then the claim will be settled to the nominee. Now, when the claim is settled to the nominee, it doesn't mean that the nominee is the beneficiary, right? The nominee is only a trustee, a trusted person appointed by the employee to receive the money in case of demise. Further, what they have to do is up to the legal hire system in their family, right? But if there is no nomination, then the PF office will go by the legal hire certificate. That's the system that is being followed. And I think predominantly we've seen all death claims being followed through the same system. For EPF settlement, yeah, that is what we. Is there any possibility to pay PF for employee exited from organization? If organization not paid during his, yes, we can.
Yes,
Yeah, Manikandan has responded. Is this our Manikandan?
Yes.
Oh, okay. So this is our Manikandan. I was wondering who is this Manikandan who is responding to. So Manikandan is also a part of our Arun's team. He also handles enterprise clients. Thanks Manikandan for being on the top of each response. Okay. Okay. So yes, Divya, if you could disable the chat so that we can end with this. If LHC is required, whether NOC is required by surviving legal hires too. If LHC is required,
NOC, yeah.
NOC is required.
It depends. Like if they are not claiming, they have to provide a letter.
NOC.
Yes, they have to provide it.
Yeah. So let's say there are three people, and one person says, "Okay, I don't want the share," right? Then the NOC is required from that one person. Otherwise it will be split into three, I guess. Yes. Recently, I visited PF department to submit Form 3A, and they didn't accept because it made online. Can you please explain on this? Yes.
So this 3A process now currently different PF office how they are handling. Earlier it was only collecting the clarification letter in 3A and they will process it. And now they brought in a process where the employee has to file a grievance, online grievance. It will be routed through that process. So once they file the grievance, the EPFO will validate that grievance and they will respond to that grievance by submitting, stating to submit the Form 3A, the clarification letter through the employer. And based on that only they will take the corrections and do this necessary updates. So this is how the current process they have changed. And I think in past 2-3 weeks before they have changed this process. So that's how it will operate from now on.
Beautiful. I think Kumar that that has Arun's answer has sorted, has at least given you the next step with respect to what you'll have to do. And now this all good things have to come to an end. So does this webinar. Thank you so very much for joining, ladies and gentlemen. That was the when we were at the core of our webinar during the presentation. We have a limit of 100 and a lot more people wanted to join. So the next time we have a webinar, please make sure that you arrive early and reserve your seats virtually, of course. And then we will shortly also try to meet in person in 2025. Thank you so very much once again. Appreciate all of your time and efforts to be here. I would also like to thank the Relativity team, the backend team. We have Divya, we have Geeta, Arun is here, we have Manikandin, Pramila also put in a bit of work to make sure all of these people are instrumental in getting this webinar to you. So a big thanks, a big shout out to all of them. With having said that, ladies and gentlemen, have a wonderful, wonderful week ahead. Let's keep meeting. Let's keep, growing our profession, and let's kick ass. Thank you. Bye bye.
Thank you.
See you.
Thank you all.
Okay. So yes, thanks. Our next PF case study webinar will be on the 6th of February 2025. So make sure that you don't miss out. Our next PF case study webinar will be on the 6th of February 2025. Bye-bye.